Hello and welcome to our latest crypto roundup. This week we delve into the unfolding legal drama involving Binance's former CEO Changpeng Zhao and Terraform Labs' Do Kwon, as well as significant market movements like Bitcoin's Ordinals Coin surpassing $1 billion in value and Ethereum's NFT trading resurgence. We'll also touch on developments in the regulatory landscape and technological updates in the crypto space. I'm Michael Del Castillo, a Knight Badgett Fellow at Columbia University, and here's your comprehensive recap of this week's events in cryptocurrency. A U.S. judge in Seattle accepted the guilty plea of Changpeng Zhao, the founding and former CEO of Binance. Zhao pled guilty to one count of Bank Secrecy Act violations. This decision by Judge Richard Jones comes amid allegations that under Zhao's direction, Binance failed to comply with sanctions and broke money transmitting laws. Zhao, who has paid $50 million personally and arranged for Binance to pay a $4.3 billion fine, faces restrictions on leaving the U.S. until his sentencing in February. Meanwhile, Binance's new CEO, Richard Tang, has stirred controversy by evading questions about the company's global headquarters and audit practices, though he later confirmed audits and in regulated locations and told the Financial Times European headquarters are in France and the Middle East headquarters are in Dubai. On Thursday morning, the Wall Street Journal reported that Montenegro's Justice Minister Andrej Milovic signaled intentions to extradite Do Kwon, founder of the failed Terra Luna ecosystem, to the United States instead of Korea. This follows a Montenegro court approving his extradition, connected to the $40 billion collapse of the Terra USD and Luna cryptocurrencies. Kwon was arrested in Montenegro with a forged passport and has denied fraud allegations. The U.S. has leveled 8 counts of fraud against him. Simultaneously, Terraform Labs, the company behind the cryptocurrencies, is embroiled in extensive legal issues. In New York, the company has requested a jury to determine the regulatory status of its UST and Luna tokens, amidst SEC scrutiny for alleged unregistered crypto asset securities. Additionally, in Singapore, Terraform Labs and Kwon suffered a legal setback when the High Court refused to dismiss a class action lawsuit against them. The lawsuit, representing 375 claimants who allege a combined loss of $57 million, accuses Terraform Labs of fraudulent misrepresentation in promoting UST. In a notable week for Bitcoin, the Ordinals Coin surpassed $1 billion in market value, a first for a Bitcoin ordinal-linked meme coin. ORDI's price has soared 1,800% since early August, significantly boosted by its listing on Binance and other exchanges. This surge coincides with the broader market's uptrend, including Bitcoin's rise over $44,000. That's a 158% increase over the past year. Analyst Christopher McPherson from Arca highlighted ORDI's position as the largest BRC20 token in the Ordinals ecosystem, benefiting from the potential Bitcoin ETF and renewed interest in building on Bitcoin. Simultaneously, the Bitcoin network experienced levels of congestion, not unrelated, largely attributed to a surge in such BRC20 transactions. The mempool, where unconfirmed transactions await network validation, exceeded its usual size, reaching around 1.57 gigabytes, according to data site mempool.space. The congestion linked to the popularity in Bitcoin Ordinals inscriptions has sparked debate among Bitcoin developers. Luke Dastier, a Bitcoin Core developer, criticized these inscriptions for exploiting what he characterizes as vulnerabilities in the Bitcoin Core software, potentially disrupting the network's efficiency and security. Dastier's concerns reflect the growing pains of the evolving Bitcoin ecosystem as it adapts to new technologies such as NFT-like inscriptions. Of course, others think the ability to build on Bitcoin in this fashion is a feature, not a bug. It'll be interesting to see if Core clamps down on the ability. Speaking of which, the latest Bitcoin Core update, version 26.0 for those who are counting, is now live, featuring a new version 2 protocol for improved security against Eclipse attacks that let malicious parties manipulate a node to behave in a way that it otherwise would have, and encrypted connections between nodes. The update also speeds up the process of bringing nodes online with an unspent transaction output snapshot, significantly reducing the time needed compared to the traditional full sync method. In a controversial decision, a French court has reportedly acquitted two brothers known as Mohammed M. and Benar M., who were responsible for illicitly withdrawing $8.5 million from decentralized finance protocol Platypus. Using a flash loan attack, the brothers exploited a code error, withdrawing funds through an uncollateralized loan and causing Platypus to suspend trading. Some consider this theft. Despite their admission to taking the assets in court, however, the brothers defended their decision to do so as those of, quote, ethical hackers, intending to return the stolen funds, they say, for a 10% fee, akin to a bug bounty without permission. This argument, in fact, swayed the court to dismiss all criminal charges against them. Furthermore, Platypus suffered another significant setback with a $2.2 million loss in a subsequent flash loan exploit, although 90% of these funds were also later recovered. On this week's episode of The Chopping Block, white hat hacker Samson, that's SAMCZSUN, criticized the, quote, code is law mantra, which some argued in defense of the hacker's actions. He labeled it as, quote, bullshit, end quote, challenging the notion that such a principle should still be relevant or accepted in today's crypto community. Samson's comments highlight the ongoing debate about the ethics and legality of actions in a decentralized finance space, particularly in light of such high-profile exploits. Deadbox and its associates, embroiled in a lawsuit with the U.S. Securities and Exchange Commission, have requested dismissal of the case. This development follows a court determination that the SEC misrepresented facts to secure a temporary restraining order, freezing Deadbox's assets over allegations of a $50 million fraudulent crypto scheme. The U.S. federal court's reversal of the asset freeze, noting inaccuracies in the SEC's claims, has led to a, quote, show cause order, end quote, against the SEC. Meanwhile, on the regulatory front, JP Morgan CEO Jamie Dimon told Senator Elizabeth Warren that the government should shut down crypto, citing anti-money laundering concerns. Quote, the only true use case for it is criminals, drug traffickers, money laundering, tax avoidance, end quote, he claimed. Telegraph was quick to point out a recent report claiming that JP Morgan has been fined $38 billion under Jamie Dimon's watch. Continuing with the regulatory news, Representative Patrick McHenry, a prominent advocate for crypto in Congress, announced that he will not seek re-election in 2024. McHenry, who chaired the Financial Services Committee, has been instrumental in advancing crypto-related legislation, including the notable Financial Innovation and Technology for the 21st Century Act, or, for those who don't like the mouthful, FIT Act, which seeks to establish comprehensive rules for the crypto market. His departure represents a notable loss for the industry, as he was a key ally and a major recipient of campaign donations from crypto players. McHenry's decision follows a trend of crypto-friendly legislators leaving Congress, including Pat Toomey and Debbie Stabenow, further impacting the industry's representation in legislative matters. His departure raises questions about the future of his signature crypto legislation and the leadership succession within the Financial Services Committee. The non-fungible token market on the Ethereum blockchain is witnessing a significant resurgence, reaching the highest trading activity seen in the last 6 months. The trading volume of NFTs exceeded 105,000 ETH in the week ending December 4, marking a sharp 250% increase since early October. This revival follows a 2-year low, possibly indicating renewed market confidence. Notably, the vintage NFT collection CryptoPunks saw a 45% increase in its floor price, reaching 57.2 ETH. Will Sheehan, CEO of blockchain analytics firm Parsec, likened this rally to a Bitcoin surge for the NFT market. The trading surge coincides with Ethereum's price rise to about $2,200, further fueling the NFT market's positive momentum. Notably, however, the majority of NFT trades are happening on Blur, a platform designed for high-frequency traders. In other words, these people aren't actually holding the assets. They're just moving them around really quick and hoping to make some money. OpenSea ranks second. Dogecoin, known for its satirical inception, making fun of cryptocurrency, celebrated its 10th anniversary on Wednesday. Initially created as a joke, Dogecoin has grown into a significant digital currency with a market capitalization exceeding $14 billion. Billy Marcus, the co-creator, humorously reflected on its unexpected success, noting the currency's surprising valuation. Over the years, Dogecoin has seen both charitable uses, like supporting the Jamaican bobsled team, and endorsements from high-profile individuals like Elon Musk, boosting its value and popularity. Despite a decline from its peak value, Dogecoin maintains substantial liquidity, trading for almost 10 cents with a recent increase in open interest. Coinbase Wallet introduced a feature allowing users to transfer cryptocurrency via links shared on social media platforms like WhatsApp, Telegram, Facebook, TikTok, and Instagram. This functionality aims to make sending crypto as straightforward as texting. When recipients click on the shared link, they're directed to the Coinbase Wallet app to claim the funds. Additionally, if the transferred funds remain unclaimed for 2 weeks, they are automatically returned to the sender. Notably, transfers made in USDC stablecoin are exempt from fees. In a remarkable display of investor confidence or desperation for new investment opportunities, depending on how you look at it, Ethereum Layer 2 Blast, still in development, attracted $700 million in locked assets. That's despite the fact that it doesn't even have an operational testnet. This surge in total value locked places Blast alongside more mature Layer 1 blockchains like Avalanche and Solana in terms of locked value. Blast's appeal stems from its all-too-familiar sounding promise to provide yields and airdrops to depositors. The platform aims to leverage deposits for yield generation through staking and other asset protocols, with supposedly automatic returns to users. With backing from Paradigm and other notable crypto investors, Blast's rapid accumulation of funds could reflect a growing appetite for risk among crypto investors anticipating a midterm bull run, or just short memories of similar get-rich-quick offers that didn't pan out. Caveat emptor. And that's all. Thanks so much for joining us today. Unchained, as always, is produced by Laura Shin, with help from Kevin Fuchs, Matt Pilchard, Juan Aronovich, Megan Gavis, Nelson Wang, Shawshank, and Margaret Curia. The weekly recap was written by Juan Aronovich and edited by myself, Michael Del Castillo. Thanks so much for listening. Have a great weekend.
Unchained is now a part of the CoinDesk Podcast Network. For the latest in digital assets, check out Markets Daily, 7 days a week, with new host Noel Atchison. Follow the CoinDesk Podcast Network for some of the best shows in crypto.